Stocks or ETFs? Which one is actually better for beginners? If you're new to investing, choosing between the two can feel confusing, but the truth is, the answer is simpler than you think. Today, I'll break it down in plain English so you can make a confident decision. Let's start with the basic idea of a stock. A stock is ownership in a single company. If you own Apple stock, you literally own a tiny piece of Apple. When the company grows, your investment grows. If the company struggles, your investment takes the hit. Stocks can grow fast. They can also crash fast. It's high potential reward, but also high potential risk, especially if you're new and only own a few companies. This is why many beginners get scared of the stock market. One company's bad day can feel like your bad day. Now compare that to an ETF, an exchange-traded fund. An ETF is a basket of many companies grouped into one investment. Imagine a shopping cart filled with Apple, Microsoft, Amazon, Tesla, Nvidia, Google, and hundreds more. Instead of buying them one at a time, you buy one ETF and instantly own a piece of all of them. This is called diversification. Spreading your risk so one company can't ruin your whole portfolio. ETFs are built for stability, especially for long-term investors. Here's where the difference really matters. When you own individual stocks, your performance depends on how those specific companies behave. Great companies can soar, but even strong companies can drop suddenly because of earnings reports, layoffs, lawsuits, or market news. ETFs smooth this out. When one company drops, the others help balance it out. Your overall ride is much steadier. For beginners, that steady growth can make investing feel a lot less scary. Here's a simple example. If you bought Tesla stock during a big rally, amazing, you made money. But if you bought right before a downturn, you could be down 30% or more. Now compare that to an ETF like VOO, which holds 500 companies. Even if Tesla drops, the other 499 companies help keep the ETF stable. This is why ETFs are often recommended as a foundation for new investors. They remove the pressure of guessing which companies will win or lose. So which one is better? If you enjoy researching companies and don't mind risk, stocks can be exciting and sometimes very profitable. But if you're just starting out or you want a long-term, low-stress approach, ETFs are usually the smarter option. They give you diversification, stability, and steady growth without needing to predict the future. Most beginners start with ETFs and then slowly add individual stocks later once they understand the market better. So if you're choosing between stocks and ETFs, think about your goal. Do you want high risk and potentially high reward? Or do you want simple, steady growth? For most beginners, ETFs are the easiest path to building wealth. If you want more simple investing lessons like this, make sure to subscribe and check out the rest of the playlist.